Thanks. We'll start. Last week, you asked me a question, when will be the exam? So the exam will be held in okay. So the exam will be held in June, and you had another question, how do you get the model answers, past papers and the model answers? Okay, so that's in the website under announcements. You can see the availability of these model answers. Okay. Right. So at the beginning, we'll look at few paper articles. Then we'll move into this slides. I think you can see this one. This is an advertisement published in national newspapers 2 weeks ago. Don't trap yourself in a pyramid. Have you heard this one, pyramid schemes? Yeah, have you heard this one, pyramid schemes? Now, pyramid is a mechanism where someone would invite you to join to sell a certain product. That's how they say. And in return, you have to sell the same product to basically 6 people down the line. In return, one such, each and everyone who has purchased the item from you should find another 6 and sell it. So that is called pyramid. Some call it network marketing. Okay? So that's a pyramid scheme. We have seen efforts taken by different parties to grab the people's hard-earned money and vanish by way of recruiting you for a pyramid scheme. Remember, that's a punishable offense. Okay. Okay, so pyramid scheme is a punishable offense. Means what? In your free time, check yourself with an Excel sheet. Put number 1, okay, then multiply it by 6 in the second, then drag it. So each step down, you are multiplying by 6. And you cannot drag more than 13 steps. You will find 13 billion. Means what? If I'm starting this kind of a pyramid, I'll recruit 6 of you and ask that 6 to in return recruit another 6. In that manner, we can only reach, say, 12 steps. 8 billion means what? Every human being on the planet Earth should be a member of a pyramid scheme by the 12th step, which is not practical. So this is why these kind of schemes will not survive. All of a sudden, they will vanish. But the top will grab a substantial amount of money by fooling you. This is one illegal product. Then we talked a lot about corporate governance. This article, which was published in the Sunday Times 2 weeks ago, with the title, "Is Corporate Governance the Panacea for Finance Company Ills?" Okay, so what do you mean by panacea? Okay, so last week, okay, in Sunday Times, you could have read this article, "Is Corporate Governance the Panacea for Finance Company Ills?" I have asked you to read paper articles and get updated. We have talked in detail about corporate governance. We looked at some questions asked in past papers regarding corporate governance. We looked at certain failed finance companies and banks in Sri Lanka as well as in other countries. We talked about Enron, and Just look at some of these subtitles. Role and responsibilities of the chairperson and the CEO. We talked about segregating the duties between chairperson and the CEO. And we looked at even some past paper questions on that regards. Compliance. Then group governance. We talked about subsidiaries, associates, and how these companies are interlinked. So you have to look into group governance. Whistleblowing. Ethics and whistleblowing. Okay. So I'm making this paper article available for you to read. At the same time, I will remind you, get updated. There are enough articles published in national newspapers regarding our subject, NBFI. Different writers come up with different views. So we have discussed these things in the class. We have looked at the directions by the CBS cell. Now, when you read this kind of recent updates, you will automatically get more information to write for your exam. Say category A, more than 20 billion. Category B, less than 20 billion. So why these categories are there? Okay. IRMC, we talked about Integrated Risk Management Committee. Please read this article and you will find enough such articles. Always get updated. Whenever you see an article relevant to the subject matters we have discussed in the class, please read them. Right. So with that, we'll move into some questions from past papers. We have discussed certain questions. After that, we look into corporate societies. Right. Margin provider, underwriter, stockbroker, investment manager. Okay. So we have discussed that part. Then on the corporate governance, again and again, I have asked you to get your notes complete and read the slides. Okay. So corporate governance, 2018 September, I have said in recent papers, corporate governance is often tested. Good corporate governance in financial institutions is essential for its risk management and stakeholder protection. Okay. So corporate governance is a subject area that you have to prepare well. Right. So your question is, indicate the main requirements to be fulfilled under the following sections of the finance company's corporate governance direction. Number one, fitness and propriety of directors. Okay, just tell me main requirements to be fulfilled under this fitness and propriety of directors. There are two. Just tell me these two. There are two factors, just two factors. After that, we'll move into some other heading, cooperative societies. Yes. I hope I'm audible and you said yes. Now I'm asking two factors, just two requirements to be fulfilled under fitness and propriety of a director. The age and the number of the companies that you can be a director. Tell me that just these two factors. Then I can move into today's slides. So a director must be below the age of, what is the age? Yeah. Right. Then the number of companies he can be the director. Okay. Right. So I want to discuss some other questions after looking into today's slides. Cooperative societies. There were very few slides So very few questions in the past papers coming out of this area. Cooperative societies are also a set of NBFIs, falling under NBFIs. In the very first class, we divided the entire financial market into different areas. Okay, so what are the institutions governed, regulated by CBSL? What are the institutions not regulated by CBSL? Under that fishbone chart, you will find these cooperative societies. Okay, so cooperative societies are based on the thinking pattern, one for all for one. Means what? Let's say you have, think about associate, a small club where the people of the village get together and help each other in a funeral, on a funeral day. Okay, what are your requirements? Okay, hut and chairs. Okay, so one is helping the other. And when another funeral takes place, all the rest of the villagers get together and help the other. One for all for one. Now, this is a mechanism where in rural or the remote areas, people can help each other. There's another concept like building societies. Building societies mean in a village those days, when you don't have a house, let's say there are 20 families in the village and the entire 20 families join together to help to construct a house for one member. And when that is complete, then they all get together to help another member to construct a house. When all the members have constructed their house, building societies is over. Right? So people find different formats. They will get together, help each other. Cooperative societies is based on that concept, one for all for one. The activities of the cooperative sector in Sri Lanka have been closely linked up with the daily life of majority of the population over a half century of the country. Cooperative organizations, enterprises are largely and actively engaged in multiple economic and social activities. Okay, so when you go to maybe Avisawel, Homakam, you will find these cooperative societies are maybe K-Ball, very active and lot of things. Maybe they are having educational sessions teaching how the girls how to sew using sewing machines, and they may organize certain loan schemes, and they gather deposit schemes and help each other on festival loans, festival advances. That's taking place. According to the statistics of Department of Cooperative Development of the Ministry of Cooperative and Internal Trade of Sri Lanka, there are about 10,000 cooperative societies with 6 million members in Sri Lanka. Okay, so out of 21 million population, 6 million is a substantial number. Remember, when you say 21 million, not everyone is above 18. So 6 million is a substantial number. Among them, there are 305 multiple purpose cooperative societies with 4 million members. Okay. So the multi-purpose cooperative societies run business such as retailing, insurance, medical, banking, etc. Okay. So they are involved in many different economical activities. NCC, National Cooperative Council of Sri Lanka, is the apex organization of cooperatives in the country. NCC is in charge of education, training, consultation, publication, and coordination of internal affairs. Right. So when we look at the history of the cooperative movement in Sri Lanka, it can be traced back to 1904, where the Agriculture Credit Society Manikinda was started. The first cooperative society was established as Cooperative Credit Society, and under this act. Since 9/11, the cooperative sector in Sri Lanka has played a major role. Anyway, when you asked cooperative societies, that is governed by the Act, Cooperative Act number 5 of 1972. It was later amended as Cooperative Employees Amendment. Right. So that governing cooperative societies, Act number 5, 1972. The cooperative societies have been organizing as multi-purpose societies. The cooperative sector in Sri Lanka has been closely linked up with the daily life of, and they are into distribution of consumer goods, supply of essential consumer services, supply of agricultural products, promotion, marketing activities in the field of agriculture, fisheries, and they are into mobilization of savings in rural areas. Right? So cooperative societies has been performing well in remote areas. It has been connecting a lot of villages. Let's think about Sanasa Development Bank. That's also based on this cooperative concept. And when you go to the AGM or EGM of Sanasa, SDP, Sanasa Development Bank PLC, you find the culture is entirely different than many other AGMs held, many other corporate cultures. Remember, that is the only AGM where you will be given breakfast and lunch. Okay? Lot of people come from different remote areas to attend to this AGM, and they look into helping the, let's say, small farmers, and they focus more on rural economy. While doing that, they even talk about payment mechanisms. Okay. So they mobilize and allocate savings in the rural areas. Right. So for exam purpose, remember the Act governing cooperative societies is 1972. Cooperative Societies Act 1972. Cooperative Societies Act number 5, 1972. Okay. So exam purpose, that is the act you have to remember. Right. The objectives under Cooperative Societies Act. Number 1, to provide for the development of cooperative societies, to amend the law relating to the constitution and control of cooperative societies, to provide for the matters connected and incidental thereto. Then there are a lot of cooperative societies. They all can be categorized into 3. Cooperative rural banks, cooperative societies on thrift and credit transactions. You have seen in Sinhala Samupakara Sakasuruwam Saha Nayadena Samiti, thrift and credit. Cooperative societies of other financial services. Okay. So you get these instructions and guidelines issued to cooperative societies. So you have to liquid limitation. Okay. So liquidity. If you don't maintain enough liquidity, the companies will collapse. Maximum interest rates for depositors. So that's directed by a guideline. How do you invest? How do you manage your investment portfolio? Provision for bad debts. Cooperative rural banks, internal auditing system, staff recruitment, guideline for collecting deposits, withholding tax. Then the provisions under the Act. Okay, so under the Act, these provisions are given: registration, member registration, rights, privileges. Right. So that is the area coming under cooperative societies. And as I mentioned, cooperative societies is not tested much in past papers. Now, since your exam is in the month of June, you have enough time to read and prepare. Now, we'll look into certain questions that you have to think and answer. I think I have taken 2 sessions where we looked into different past paper questions and answers. and by that time I have not completed capital adequacy. Right? So in my questions today, I will include that part as well. So far, we looked into these areas when we were looking at past papers. Insurance, I think we have covered a lot of questions coming under insurance, venture capital, unit trusts, then primary dealers, payment systems, then on corporate governance. So all these areas we have discussed in detail, either as normal class or when we were discussing past papers. Now I'm giving you a set of questions where you have to uh, look into capital adequacy. Okay, so I want to focus a little bit on capital adequacy related questions today. Okay, at the beginning I would give you this question: what are the elements of core capital, or you can say tier 1 capital? Send me your answers. What are the elements of core capital? Yeah, so the exams will be held in the month of June. Good. Yeah, so first is paid up ordinary shares. What else? List me all the relevant factors. Number one is paid up authorized ordinary shares. Agreed. What are the others? Yeah. Yeah. Right. Sada. What else? Good. Then at least two more. General other reserves. One, at least one more. Okay. Retained profits, and if you add one more, unpublished profit and loss. Unpublished profit and loss. Right. Now we talked about pyramid schemes today. Right? There were no directly involved questions from this area, but I'll give you this one. 1 minute. Now, I think Friday we got a news alert. What is the maximum ceiling for deposit insurance? What is the maximum amount that will be given under? Yeah, tier 1 capital and core capital are one item. Okay, what is right? Right. 600,000. right? So that is the maximum ceiling. Now let's see a message we got last Friday. So Friday by 6:10, I got this message. Central bank increases the maximum compensation payment under deposit insurance scheme from 600,000 to 1.1 million. So the increment is by rupees 500,000. So what is the maximum compensation? Maximum compensation under this one, deposit insurance scheme. The answer is 1,100,000, up by 500,000 than the answer you said. So this is why, my dear students, I'm asking you to get updated. Means what? Yes, you are correct. In the classroom, I have given you a value, 600,000. But let's assume I have ended the classes by now, okay? And your exam is in the month of June. Within that month, okay, suppose I did not conduct this class today, right? But what I have taught has been changed. This is why you must always get updated. I'm not saying everything will be changed. Let's say insurance, what are the two types of insurance? That will not be changed, right? But these kind of things, please get updated, right? So how do you get updated? One is reading newspapers, or having news alerts like SMS alerts from other than LBO, likewise some kind of a mechanism. But since we are in NBFI field, we are supposed to know these updates. Okay. So what I taught may be changed within these 2 months. Okay. I'm not going to say the base will be changing, right? Everything will be changed. No. Within this period, simple changes will be there. Please get updated. Okay. Right. So I was discussing with about the pyramid schemes. Right. Let me just talk a little bit on pyramid scheme. Then we'll look into this question. After that, we'll come back to this one, core capital. Right. When I joined to my first job immediately after graduation, one day, one of my friend who also graduated with me called me and said, okay, so how are you, where are you working, and what is your salary? And after discussing for a few minutes, he said, I found a very good mechanism to be successful, and we are on a very slow track, and I want to be very successful within a short period. Then I said, okay, how? Then he said, okay, there's a seminar, can you come and join? So I went to a place he mentioned, and that was almost like a good office. The difference is, set of young people, including me, were waiting in the lobby until we were asked to get into a particular hall. The receptionist, unlike in any other place, in front of the receptionist, there was a cash counting machine. All of a sudden, bundles of money were presented to us by maybe a peon, and she started to count them. Means what? We, the just passed out graduates, will be hooked by looking at the amount of money they are counting. That's how you are attracted. So when I got into the hall, there was a presenter. He perfectly analyzed our life. Okay, now you are in the age of, let's say, 28, and you will be retiring by 55, and your workable life is this much, and let's say your salary is this much. And he said, okay, this much of hours are available. If you do nothing but just watch Hindi movies, say 3-hour movies each day, this is the maximum number of Hindi movies you can complete watching within your lifetime. Within this lifetime, how can you achieve these things with this simple salary? That's how we started. And finally, he was showing us, those days you called it gold quest, a network marketing, a pyramid. But I just immediately after coming out, my friend called me and said, okay, what is your view? I said, no, I'm not interested. And he asked me why. I said, I'm not interested in short, unbelievable, fastest tracks of being successful. You can be successful all of a sudden due to a value addition. Maybe you find all of a sudden get a patent right for something, maybe for COVID-19, a better vaccine earlier than any of these. Yes, you should have been rich. That may. But without any mechanism, finding someone and paying myself to get recruited and making others get to pay for recruitment will not make me rich. And I was not interested. So that was Gold Quest. But they are running such kind of seminars and targeting a lot of, okay. So they are targeting a lot of graduates and undergraduates who want to be rich quickly and those who can speak in front of a crowd. They in return become the ambassadors of this kind of pyramids. Okay, now this question was asked with a heading like this: finance and leasing companies confronted a severe financial crisis during the recent past, and the crisis hit companies are now at the tail end of the restructuring process. So they were referring to Golden Key and the related group. Number one, so that is the question. A major cause for the crisis was the failure of some unauthorized deposit takers. Who were those? Why did they fail? Okay. So the question is very simple. Okay. But second part, what are the reasons for existence of unauthorized deposit taking business? What is the advice you would give to these who are seeking to deposit money with those unauthorized deposit taking? Okay, right. So I'm asking you the question: what are the reasons for the existence of But send me your answer. What are the reasons for the existence of unauthorized deposit taking institutions? Think and tell me. Pyramid scheme. When I was okay, maybe 20 years ago, Gold Quest was very popular, and there were a lot of people who want to get rich quickly join this bandwagon. So it's like the Pied Piper appearing again and again. Again and again, we have heard with different products, these pyramid schemes are emerging, and a lot of people lose their hard-earned money. Okay. Now this one is basically informal financial sector. Why do they exist? There's a formal one, commercial banks, then we are there, NBFIs to help the people, but still unauthorized financial sector exists. Why? Okay, so the existence you can look from two angles. Number one, deposit. If people don't deposit in these institutions, they cannot survive. Number two, loans. If people don't take loans from unauthorized institutions, then they will not survive. Think on these two sides and send me your answer. Money. Okay. Yeah, what are the reasons for existence of unauthorized deposit taking institutions? Okay. Theoretically, there is no approval for them. The only reason they survive is people go and deposit in them and people take loans from them. That is the only reason they survive. Why do people do that? That is the question. Okay. Right. So higher interest rate is one side. Right. So this is one reason why people deposit their money. Good. People also take loan from them. Why? So depositors prefer higher interest rate than given by any of the authorized institution. Okay, fine. The other existence is loan. People go and take loans from them. Why? Good morning. Abhi, इधर ऑप्शन लिखा होता है? Yes. Yeah. Right. Right. Okay. Good. I accept. Let's look at the answer. Now, reasons. Some people, such as senior citizens, are looking for high interest rates. Some persons who have high income to conceal do not invest in such funds in regulated institutions. Think about the drug dealers. Okay, the people who have earned money, who cannot disclose the source, will find such places and invest. Okay, some persons are naturally high risk taking. That's another part. Some people are naturally, their risk appetite is very high. They want to undertake very high risk. Okay? Unauthorized institutions various attractive marketing techniques and offer very high interest. Okay, right. So that's there. Then the first question was, a major cause for the crisis was the failure of some unauthorized deposit takers. Who were those? Why did they fail? So the answer read like this: Golden Key credit card company, several unauthorized deposit takers which operated under, okay, reason, operation as a Ponzi scheme. Right. Now, Ponzi scheme. Right. There was a guy who was living in US, an migrant from Italy. Right. His name was Charles Ponzi. Right. came to US and started a business, that is importing shoes from Italy. For that purpose, what he did is he got money, ordered, and he sold the Italian-made shoes to Americans. Within this period, he found a nice mechanism. Forex, the Italian lira and US dollar always fluctuate. There were days, just because of this fluctuation of price, like currency value, he got a profit, not just a profit margin of the shoes. Then he said, okay, I have a business where I can give you 6% return per month. And he started to sell a set of coupons. All of a sudden, it became so popular, and everyone wanted to deposit money in Ponzi scheme, Charles Ponzi scheme. But he soon found he can't manage it. That forex change is not sufficient to give 6% return on monthly basis. So what he was doing, he collect your money and handing over the 6% out of the accumulated money from your own invested money. Let's say you have given 100,000 per month, you have to pay 6,000. So instead of doing any other business, your own 100,000 he keep in his locker, and after the end of the month, he'll take 6,000 out of that and pay you. He has only 94,000. He is not doing any other business by that time. And next month, he has 94,000. He'll pay you another 6,000. So 88,000 he's having in his pocket, his drawers. But when you say, okay, I deposited 100,000, believe me, Mr. Charles gives me 6,000 every month, and that's proved. He has given me. My friends also join. What is happening? He's not doing anything. Your money is given back to you. And more money comes in, and he's very happy. He becomes rich. He started to spend like a rich man. No one knew what his business is. All of a sudden, a journalist published an article about what he's really doing. Everyone wanted to withdraw money. He can't pay back, and he was jailed. These schemes are known as Ponzi schemes. Pyramid scheme is one such. Okay. So another question under there. What is the advice you would give to those who seeking to deposit money with unauthorized deposit takers? Okay. What is your advice to depositors in unauthorized institutions? Okay, what is your advice to those who deposit in unauthorized institutions? So we'll do a few such simple things and get back to capital adequacy. So this kind of simple questions were asked, but when you are writing your answer, you can use these terms: pyramid scheme, Ponzi scheme. Okay. Right. So what is your advice? Okay. Right. Now, your answer is agreed. I would say the technical term for that is market discipline. Market is disciplining me. When we were discussing capital adequacy, we talked about Basel. The third pillar of Basel is market disciplining. Means what? the depositors and the shareholders will read the annual reports and published financial statements and take financial decisions based on that. So if a company reports losses or is showing some losses, immediately shareholders get out of this company. Depositors withdraw their money. If the management understand that signal, they will behave in a very disciplined manner, financial disciplined manner. So that is called market discipline. But remember, when you say refer the annual reports in previous years, that's correct. But think about these unauthorized institutions. Who are they? They are not listed companies, right? They are living in, let's say, your own area. There was a particular informal financial guy in Matukam area. He had a company like Sunrise Investments. All of a sudden, he disappeared after grabbing a huge amount from depositors. Okay, so this informal financial institution owner who operated from Mathugama has been giving a substantially higher interest rates for depositors, and he has organized a party to the top clientele of him. He has given a cocktail to them. One lady whose husband is working in a ship, right, a sailor, has deposited, let's say, 20 million in this informal company. After listening to the presentations done by these Sunrise Investments in Mathugama, she thought of becoming further rich instantly. So what she has done, she has mortgaged her house to a bank, taken another 10 million against mortgage, against her residential property, and deposited in Sunrise. After 2 weeks, the guy has disappeared. Right. Now what has happened? This lady has done it even without consulting her husband. Right. Now what has happened? The 20 million deposit is gone, and her husband has to pay the mortgage to the bank, or else they will find even the residential property disappear. So that is informal financial sector. If you deposit in another bank and don't get your money back. Okay. What do you mean by unauthorized? Central bank has not given any license to operate as a deposit taker. At the very first day, we looked at what is a deposit and who can grab deposits, who can collect deposits from general public. Others cannot go to law. Please understand that. You can go to courts if you have not. If you have invested in an authorized place. Unauthorized, let's say Sakwiti, unauthorized. Right? There was a guy called Sakwiti, former tuition master. He has run deposit-taking institutions informally. People dropped their money, and he was jailed, and people lost their money. People may go to courts, yes, but they are not covered by deposit insurance scheme. Only authorized institutions' deposits are covered by deposit-taking institutions. Right? So, ETI, finally, they may get a compensation under deposit insurance scheme, authorized. CIFL, that's an authorized one, but it still failed. Then they may get a compensation. Those days that was 600,000. Earlier that was a lesser amount. Unauthorized institutions, right? So your question is, sir, what happens if you deposit in unauthorized bank and don't get your money back? What should people do? People can go to courts, but they are not covered by deposit insurance scheme. So they won't get a compensation like 1.1 million, what we discussed today, just now. That they are not entitled. But after liquidation, if there is any amount left, then they can get through a court order. That's all. That's all. That's all what people can do. Right? So before owners get anything, right, after clearing the liabilities, whatever the amount, next will be the depositors. After that, the equity holders. So most of the time, there's nothing to collect. So people will not get compensation from Sri Lanka Deposit Insurance. Okay, right. So I'm asking you this one. Advice to depositors in unauthorized institutions. What is your advice? If you say annual reports, refer annual reports, I would say unauthorized institutions are not having annual reports to read. Right? They get trust. As long as people believe in them, they will be able to grab money, like Charles Ponzi grabbed money from general public. But they are con men. Con men means they are really cheating you. At the same time, they may pump up their money in an illegal manner to some other country, say maybe Dubai, Singapore, and just vanish. Then you will find your hard-earned money lost, gone, vanished into thin air. Right. So question is, what is your advice to depositors in unauthorized institutions? Right. So in the model answer, advice: do not look for very high interest rates, as high interest means high risk. Okay. So you have to say, whenever you are given higher interest rate, that means you are undertaking a very high risk. Deposit and invest in unauthorized banks and financial institutions and securities and choice based of safety and soundness. Okay. So that is the advice. Right. Back to our one. Right. Outline the nature of following regulator and supervisor requirements and their importance to the safety and soundness of finance companies. Okay. So I'm asking you importance to safety and soundness to finance companies. This one. Number one, risk weighted capital adequacy. Now, you asked why this one is important. Risk weighted capital adequacy. Okay, like your answer. Okay, right, good. Okay. Right. I'll accept your answers. Right. Right. Capital adequacy ratio is a ratio used by financial institutions to determine the adequacy of their capital, keeping in view their risk exposure. Okay. So capital adequacy is to determine the adequate amount of capital to be kept regarding the risk exposures undertaken. Regulators require a minimum capital adequacy ratio so as to provide the banks with a cushion to absorb losses before they become insolvent. Okay. So when you have capital adequacy, you have a cushion to absorb shocks in the market. That's how you put it. This improves stability in the financial market and protect deposit holders. Okay. Right. So it is a way to absorb shocks in the capital market and to protect depositors. Okay. Now I'll give you another question coming out of this area, capital adequacy. Right. First, I'll read this one. A listed finance company. So we are referring to a finance company that is listed in Colombo Stock Exchange. A listed finance company intends to invest in a new project. Okay. So they want more money through establishment of a new subsidiary. Right. So there is a finance company. They want money through establishment of a new subsidiary to fund another subsidiary. In order to initiate the project, it intends to raise a large sum of funds from public within a reasonable period of time. Okay. There was a time, 2008, where the interest rate was about 20%. So for fixed deposit holder, you will get 20% interest, right? And by that time, 2008, John Keel's Holdings came up with a right issue to start up an ice cream factory to one of its subsidiaries. So the right issue has a purpose. We need more money. How do we fulfill this money requirement? By issuing further shares to existing shareholders. That is the right. This is what's happening here. A listed finance company intends to invest in a new project through establishment of new subsidiary. In order to initiate this project, so you need money, it intends to raise a large sum of funds from public. So how do you raise money from public? Either by equity or by no other means here, because you are not a bank. If you are a bank, you can go for a deposit, debenture. Yes, you can go for debentures within a reasonable period of time. Okay, so there are a lot of mechanisms why you are not John Keel's this time. You are a finance company listed. So if you are listed, you can go for rights or you can go for debentures. Then there are the other financial instruments which you talked at the very beginning. Okay, so at the very beginning we said if you are a specialized leasing company, what are the alternatives of grabbing money instead of deposits? Okay, right. Now you need money and you are a listed company, and that's a licensed finance company. Number one, describe 4 possible ways that the finance company can raise such funds from business operations. Question number 1, list methods of raising money. Right? To whom? A listed finance company. A listed finance company want to establish a subsidiary, and for that you need substantial amount of money. So list the methods of raising funds for the listed finance company. Describe 4 methods, 4 possible ways. Okay, so you have to mention 4 methods of raising money. Tell me them quickly. Okay, let's say in order to start your subsidiary, you need a big amount, 500 million, half a billion you need. How do you raise 500 million from the market? Definitely not through credit cards, my dear. Okay, you need 500 million. Loans, I agree. You go to a bank and discuss, I need a loan to start up a business. Yes, a finance company can discuss with a bank to get 500 million loan. Right? Yeah, under shares. Okay, 1 minute. Under shares, you are a listed company. You are listed in Colombo Stock Exchange. So you can't issue shares through IPO. Then how do you issue shares? There's a specific term. What is that? There's a specific term. Yeah, that is shares. What is that? Rights issue. I want that specific exact word. We have talked about rights issue. A listed company can issue shares to existing shareholders below the market price. That is called rights issue. Okay, right. Bank borrowing. Yes, that is what I accepted as loans earlier. Partner. Asking a partner to join the business and finance. Okay, partners. Let's say you are a listed company. You can ask a partner. Again, the only mechanism is issuing rights. Now NDB. Okay, issuing rights and a partner will join them. Right? So partner can join only through rights issue. Why? You are the listed company, no other mechanism. Okay, return profits, that's there. Okay, what else? But return profits, okay. Crowdfunding you can't do, you are the listed finance company. Crowdfunding is for the startups. You missed one word. Right issue, agreed. Okay, now remember this. For the company, you can get money only through 2 different methods. One is equity. Since you are already listed, you cannot further go for IPO. The only mechanism available for you is rights under equity. Okay, under equity, I would say number 1, rights. Number 2, warrants. We have discussed about warrants, right? Warrant is a license that can be traded for a considerable period, and upon expiry date, you have to subscribe. Rights within a short period. Now this one, warrants will not work. Why? In order to initiate the project, it intends to raise large sum of funds from general public within a reasonable period of time. This one, okay. So you can raise equity once you are listed only from rights and warrants. Reasonable period of time. That is given. Means what? You need money within 1 month. This 500 million you need within 1 month. You are not ready to wait for 2 years to get this 500 million. Therefore, warrants will not work, rights will work. Okay, that is under equity. Then under debt. Under debt, what you said first is correct. Bank loans. Yes, you can get loans. But tell me other instruments falling under debt. Loans is number 1. Agreed. What are the others? If I re-ask a popular question from you, what are the alternative funding methods for a licensed specialized leasing company? specialized leasing company. Okay, loans, yeah. Here under mortgage, you can use mortgage is correct. Another word, secure, secure, mortgage is okay. Another word is securitization or mortgages. Yes, same. What else? Okay, I'm asking the same question again. A specialized leasing company cannot obtain funds through issuing deposits. What are the alternative methods of funding for the specialized leasing company? Sir, can't we get money from selling all the stocks at the CSC? Right, say you are a listed company, okay, and the owners sell entire owned stock to general public. Yes, you can, but you will not be having any position in the company thereafter, right? So no owner is doing that. Owners want to get money to further develop the business. But my dear, your question is valid. There are culprits. In the name of doing business, they just arrange an establishment, go to IPO, sell it to the general public and get out. Right? That happened during dot-com bubble burst in US 2002. Right? Means what? A lot of young people, they knew a little bit of software developing, but they were not really talented people. They just make arrangement and form a company, run few days, list it. So the general public is flocking to buy their shares, believing they are the next Steve Jobs, they are the next Bill Gates, they are the next Jeff Bezos. And finally what they find, okay, no one, the real owners have sold all their shares, has vanished. And the general public who purchase the shares of such companies do not know anything about software. So the company vanished. That was the dot-com bubble burst in US. Right. Back to my question. Debt. Okay, loans, mortgages, what else? How many times we have discussed? Promissory notes, commercial papers. Okay, promissory notes, commercial papers. Right. And one more very valid thing missing. What is that? What is that? Turn to the slides or notes or whatever you have under elements coming under tier 2 capital. You will find this nice term. What are the elements of tier 2 capital? You will find this nice term. Fill it. Then I'll return. You said what are the elements of tier 1 capital? Very good. Now look at tier 2 capital. You will find another alternative way of funding this project. Then write it. I'll return. Right, so what is that? Okay, debentures. Okay. Right, now revaluation of reserves you are not getting from outside. Okay, retained earnings you are not getting from outside. Right, now this one agreed, but that's coming under tier 2 capital, agreed. Right, now look at this question. They want to have a subsidiary formed. For that they need huge amount, let's say 500 million within 1 month. Okay, So revaluation of reserves will not give you additional money, right? Revaluation of your reserves will not enable you to buy anything new for this startup subsidiary. So you need fresh cash. One is go for rights, the other go for debentures. Then what you said, go for loans, promissory note, commercial papers, that's there. Okay. Second question coming under that. Okay. So remember the first set of questions which we discussed from past papers were very direct. Insurance, what is that? Very simple. Primary dealers, payment mechanism. Then a little bit difficult in corporate governance related one. Directions, little bit different. Now comes an area you have to think. Second question, which of the above method has the ability? Now you talked about methods earlier. What are they? These items, number 5. Okay. Which of above method has the ability to increase supplementary tier 2 capital of the finance company and how? Okay. Which of the above method can increase tier 2 capital and how? 1 minute. Now, treasury bill is a debt instrument issued by government. No one else can issue treasury bill, right? Treasury bill is for short term, that is less than 365 days within 1 year maturity, right? Treasury bond is government issued by government and time is more than 1 year, so we call it long term, right? So if you want to compare treasury bond, you can compare that with debentures. A company cannot issue treasury bond, so the bond which the company issue is debenture. Okay. So I agree with your question. Corporate bonds is debenture. Okay. Now these days, again, the government is talking about the bond scam, right? Treasury bond scam. So that's treasury bond. Similarly, debenture is corporate bond. Agreed. So the answer for this question, what was the question? Which of the above method can increase tier 2 capital? Another word for tier 2 capital, supplementary capital. Another word for tier 1 capital, core capital. Okay. Tier 2 capital can be increased is debenture. Earlier you talked about 5. What are these 5? Rights issue, debenture, loans from other banks, then promissory notes, commercial papers. Out of this 5, tier 2 supplementary capital can be increased by debentures. Okay. Now let's look at the answer. Right. Issue of subordinated term debt or debentures, which can be taken into tier 2 capital with the Central Bank of CBSL, Central Bank of Sri Lanka, approved, subject to existing rules and regulations. Okay. Right. Number 3, describe 3 disadvantages of raising funds through the method described in above. Means what? What are the disadvantages of issuing money, of issuing debentures? Right. So what are the disadvantages of issuing debentures? That is the question. Now in this case, okay, so the case is there is a finance company, they want to start up a subsidiary, and to do that, let's say you need 500 million. Either you can raise rights and get this 500 million, or you can get 500 million through debentures. If you issue 500 million debenture, you will get the money, but there are disadvantages. What are they? Think and send me your answer. Okay, what are the disadvantages? Okay. Now, if you issue shares, if the general public, very good. Each company has certain borrowing capacity so that borrowing fund reduce. Okay, yeah, that's there. Agreed. What else? Okay, I'll give you some time. Now, just think, when this finance company issue shares, do they have to pay dividend? Do they have to pay a specific interest? Right. Is there a expiry date? Okay. Think about debentures. Very good. Very good. Very good. If you issue rights, you get shares and you need not to pay dividends. This one, you have to commit for the interest, whether profit or loss. Very good. That's one. Maturity. Shares will not mature, and the only way you have to pay back shares is liquidation of the company. Debentures, is there a maturity date? If such, do you have to pay that amount back? Let's say within 5 years, can 500 million be repaid within 5 years? Okay, so that's there. Right, happy with the way you answer. Right, so the answer reads, need to repay the total principal at maturity, and hence to ensure adequate funds are available to meet the liability. Maybe 5 years. After that, you have to find another 500 million. Okay. Interest need to be paid periodically. You said very correctly, whether you make profit or loss, you have to pay. Result in increasing the gearing ratio. That is the first thing you said. There's a capacity for each firm to take loans and you will reach the maximum. Yes. Result in increasing gearing ratio. That's what you said. Need to discount 20% annually from tier 2 capital. Okay. Tier 2 capital will increase, but each year 20% will come down, and on the fifth year, 0. So these are the issues. Right. Last question here. Explain major assets that a finance company can acquire out of above funds and importance of such assets to the finance company. Okay. Now you got money, right? Either by debenture or by shares. Now you can acquire assets. What are the assets? Okay. You're a finance company. What are the assets you can acquire? Yeah, you're the finance company. Now you have money, whatever. Then you can acquire assets. What are they? Okay, good. Right. So the answer is number one, loans and advances. Means what? Right. A bank or a finance company, you get lot of money, and number one asset you acquire is giving loans to the customer, loans and advances. So it can be lease rentals recoverable, credit card rentals recoverable, housing loans recoverable. So that's loans and advances. Then number two, investment in government securities. That's for liquidity, capital adequacy. Number three, shares. You very correctly said. Number four, leases. You can give. So number four, leases, credit cards, etc. Number five, real estates. Then you can say pawning, margin trading, all the loans and advances in different categories you can say. Okay, good. Right. So we are reaching to end the session completely. Right. So you will have your exam in the month of June, and I have covered almost all the areas relevant for your exam, and now we have to do past papers. So you can get the past papers and either by post with the model answers. That's what I always recommend. Okay. Do as much as possible. Let's say take one topic, insurance, very simple one. Go through my notes and take all the past paper questions on insurance. Complete that. Then search a little bit. Get updated on recent, whatever happens. Let's say I have given you the deposit insurance compensation 600,000, but within a couple of days it changed 1.1 million. So your answer should be changed. So you must get updated. This is why I showed you where you will get updated on these things. Okay, that's for exam purpose. Then a little bit to your life with our own experience. Okay, I'll tell you some different examples. Once the customer came to Ambalangoda, let's say, okay, I'll Balangoda branch. The customer comes with a huge set of files, and he said, I need 40 billion, right? And my purpose is, right, my purpose is to start up a palm oil related company. Then the manager said, okay, I have to send this file to head office, and they will take, say, about 2 weeks. So we are the finance company, and we normally provide credit faster than banks. So banks would evaluate very much strictly than a finance company. That's why bank interest rate is slightly higher for loans, lower for loans than finance companies. Even the deposit side, banks offer slightly lower deposit than finance companies. The risk is the reason. So we undertake slightly higher risk than banks. But this one, the manager suspected. Okay. Then I asked the manager, why did you suspect? He said, the customer would first come with nothing in his hand, discuss. Then I give him application and said, okay, submit the application with all the relevant information. This is the very first time a customer comes to me with a huge complete file. Even before looking at the file, I was suspicious, something unusual. Then this is why I said I need 2 weeks at least, and I'm not evaluating, that is evaluated by the head office. Okay, fine. Then when the customer left, I took the file. I looked at the facility he's asking 40 million. for the small branch, remote branch like ours, this is a very good business. Instead of, okay, if we forgive this opportunity, how many three-wheelers should we lease out to get 40 million? Right? For the branch, this is a superb one. But I was suspicious. Then I looked at his clip report. The perfect one, not a single check return. And within 2 years, he had taken 200 million and not a single delayed payment. Superb. But I suspected. Why? Okay. I looked at my simple accounting formula. A equals what? C plus L. Means what? If a customer has taken 200 million loans within 2 years, and if he's perfectly settling that, paying out that, what does it mean? Yeah, tell me, what does it mean? Look at the formula. Okay, liability is 200. Look at the formula and tell me what should have happened according to this formula. What should have gone up? When L goes up, liability goes up. Very good. Assets should have also gone up by 200 million. Okay. If assets should have been going up at 200 million, if he's a business person, at least he would get 10% return out of his assets after settling the loans. So 20 million comfortably he must be able to pay by himself. But here he's asking a loan of 40 million. Right, fine. I looked at his assets. No such other than the companies. Okay. No personal assets, but he is ready to mortgage the land from Dambul. Okay. Now he has one asset, that is a land in Dambul. Okay. If he's having asset in Dambul, he should go to Dambul branch. He's coming to Balankodu. And a guy who is having a land in Dambul will not be interested in palm oil, but the guy who is living in Porana Agalawatta, Matugama, would be interested in palm oil. And I'm suspicious. Okay. Then I looked at the companies he owns. He has a holding company and 5 subsidiaries. And he has given the qualifications of people working under him. Very good. Fascinating. But why should I need this information? And why is he submitting them to me? In addition to that, audited financial statements. Superb. Right. So this guy is having audited financial statements. He took a look at the balance sheet. So the balance sheet is, the audited balance sheet is written like this. What's wrong with that? He looked at just at a glance. He noticed this. What do you notice when you see this balance sheet? What do you notice? Very good. Issue with spelling. Very good. Now, he suspected a qualified accountant would not make this kind of simple mistakes. Then he looked at the name and the contact number of the audit firm. He took a number and called. It's out of order. Okay. An audit firm's number is out of order. He was more suspicious. He looked at the name of the audit firm and took a directory of audit firms listed in Sri Lanka. This name is not there. He turned down the facility. Right. After few months, the same customer goes to another finance companies, a small finance companies called Pity Branch. He obtained the facility, the same file. Means what? My dear, when you look at things, you must be able to see very simple things. A equals C plus L. Okay. Look at Sri Lanka. How many loans we have taken and what happened to us? Okay. If you take a loan, my dear, you must be developing an asset. What is an asset? Asset is something that is in the capacity to give you cash in return as a cash flow continuously. If not, that is not asset. Okay. Say Dubai, they have towers, high-rising buildings, reclaimed lands. All of them are generating money through tourism. Sri Lanka would have done that if there was no COVID issue, which I agree. Right? Now, Dubai, they don't have anything else but other than loans. Right? These loans can be settled because tourists come to this country. They get attracted. In really, they don't have anything to sell other than these man-made things and the desert and few camels. Okay, right, back to this one. A equals C plus L, that's one. Why does he come to Balangoda having a land in Dambulla? Okay, why is he want to have palm oil business instead of moving into Mathugama area? Okay, right. Another finance company gave him this facility, and after 2 months, they found, okay, this guy is not paying back. Third month, it's not even answering the phone call. Now you have a security, right? A land in Dambulla. They tried to legally look into this and found this land belonged to Dambulla Rajamaha Vihara, right? So they have given a loan against a forged documents, right? So when you are working in bank or the finance company, you have to be very mindful of simple things. Then on general side, I talked about this Mathugama incident, a housewife falling into trap. I'll tell you another example. A good businessman, not a huge first-class businessman, a village-level businessman, he runs a good cash cow, a good business, generating cash, a grocery, plus some other petrol shed and some other items. And he has not educated in accounts, economics, but he had a tacit knowledge, a knowledge given by his generation, father, grandfather, who were all in business, to mitigate risk. Even if you lose everything, there must be a mechanism to live on. A set of other assets than what you are developing should be developed. So this family, from the very beginning, they have been collecting gold. This is how the traditional businessmen work. Okay, gold. Right? They are not investing in shares. They are not that much educated. They are not financially literate into that. So the traditional thing is gold, but they don't buy gold just in biscuits, but jewelry. So the females can wear it whenever they want. If not, they know they have asset growing. His wife is also not that much financially literate and very good-hearted housewife. Rented, okay. A neighbor, in a neighborhood, there is a house that was rented out, and a young couple came to this house. they naturally became very friendly with the housewife. And on one incident, they have asked a simple loan from the housewife. Let's say 5,000. Taken the loan and within 1 week settled. So this is how the con men work. Right? Then after 1 month, once again, this couple asked 100,000 for the business purpose, and they are ready to pay interest. What is happening? Are you into informal financial business? So in villages you will find mudalanis are giving loans and charging interest. That is informal business. But this mudalal is not doing that, and the wife said, no, we are not doing uh, loan and the credit business. My husband is looking after the business. Then they knew, okay, we can't move into that. And after some time, not for business purpose, but for health related issue, the wife has to be hospitalized, and this young couple is not having money, and now you are selling sympathy. Now you need 300,000. Housewife said, okay, I don't have cash, right? My husband gives me cash only on monthly necessities, and all the business related activities he's handling. But I am trusted with gold jewelries, right? Since my sympathy is there, I'll hand you a chain, a gold chain. Please settle it within 1 month somehow, because I'm not going to reveal this to my husband. If I tell this to my husband, he will never give this chain, right? So you can mortgage or the pawn out this chain, and please settle it. I'm not coming out to the pawning center. You do it yourself. Superb. And they pawned it and settled within 2 weeks. Now what has happened? You are grabbing more and more confidence. Right. Few times this repeated, each and every time the value of the loan is going up, 500,000. Now this young couple understand they have a huge wealth in gold. Right? So they take about 1 million worth gold articles from this housewife, pawn them in a leading finance company. Now, this finance company asks interest rate to be paid on monthly basis. Whenever they get this call, they conference this call to the housewife and say, look here, Akka, if we will not pay this amount, what will happen? Your jewelries will be sold out, auctioned out. Now this housewife is very much worried. She gives another necklace and say, okay, please settle this and somehow save my gold. Okay. And this young couple says, okay, we have a property in the far away area and that value is 20 million. We are going to sell it. And when we sell it, we will immediately settle your loan. Now they have got what? Confidence, trust. Mind you, when the husband comes to know this, all the gold reserve is gone, and the young couple has fled away. They cannot be traced. Okay. Right. So you have to be very mindful whenever you are granting loan. We at banks and finance company are entrusted with others' money. Right? So these are not our money. We talked about venture capital. Yes, fine. If you have your own money, you can give it loan, but be mindful when you are giving loan. Trust is something very difficult to find. Instead, you must evaluate. We talked about Cambly. You know what Cambly means? Okay. Look into the areas. We talked about 5 C's. You know what comes under 5 C's in credit evaluation. Do your credit evaluations perfectly. The last one, Campari. Last one under Campari, insurance. That is the security. That's what went missing in Dambulla case. Right? Don't just rely upon mortgages. Look in all the possibilities. If everything fails, mortgage will be the last sort of action. But don't rely upon the mortgage. Look at other avenues. At the same time, remember, it's very difficult to evaluate human beings. Right? Like the housewife, you can be fooled easily by the smartest people. Okay? So the smartest people have their own ways of cheating the bankers and the business people and unsuspecting, genuine, honest people. At the same time, when you are trying to help someone financially, look at your livings. Always set a limit. Okay, based on my salary, this is the maximum amount I can give as a loan for my friend. Okay. One more example before we say goodbye. Okay. In another finance company, there was a cashier who was a very honest, long-standing cashier. He is trusted by almost everyone in this finance company. And he had some properties owned by his father and mother transferred to him after his marriage. Now this housewife wanted to start up a business with his brother-in-law. Right. So he mortgaged his property and gave them a loan to do Highland agency business. Now, this brother and sister, they were very new to business world. Okay. They got money by the mortgage. Husband is working in a finance company as a chief cashier. Now the sales reps whom they have recruited, they played out. This brother and sister need more money to run the business. And husband said, okay, I have mortgaged all my properties. Please settle them. I can't do that alone by my simple salary. Okay? You took loans to run a business and I mortgaged my properties. Now, please somehow settle it by your own business. Now they found the party which we discussed today. Informal money lenders. They were very happy. There comes a young brother and sister, right? And they want money instantly. So they got mortgage the rest of the assets. Okay, which husband was not ready to give to banks. Now he is mortgaging them to money sharks. Right. Money sharks charge very high interest, 10% per month. And this brother and sister who got money, they had no financial discipline. They started spending and running the business out of money from loan sharks. And it continued. And one time, they cannot further take loans from money sharks and they are now ready to claim the mortgage. The bank cannot wait no more. They went to courts and all the assets were gone. And Highland agency was taken by someone else. They can't run the business. And the poor husband lost his job. Right. Why? He has taken loans. He has engaged in certain malpractices while being the cashier. He has never done that. For the very first time, he has done it and got caught. This is finance world. Okay. And one more, microfinance. Act number 6 2016 covers microfinance. Most of these companies which come under the name of microfinance are not really doing any activity relevant to microfinance. Microfinance means we are giving loans for those who cannot loan from bank. Okay. Sometimes this targeted sector is known as NINA, no income, no assets. Means what? No loans. No bank or the finance company is ready to give them loans. But microfinance companies do not evaluate like venture capital, your asset or your income, but want to help you to overcome your existing poor condition. So what they do is they form societies, and each one member guarantees the payment of the other. We believe this society, in the name of shame, will honor payments. And the microfinance company is expected to educate a lot. Okay. There's no point of spending unnecessarily when you don't have money. Don't grab by liquor, right? Give up your smoking habits and try to somehow manage your finance. So they must educate. They will give a very small loan at the very beginning. Let's say just a loan to buy a pedaling push bike plus a box, so you can become a fish seller, or money to buy just one she goat, and someone else in the community will buy few other goats. Finally, the entire village can sell goat's milk, and they will settle it collectively. That is the expectation. But instead, what happened? These microfinance companies started to give loans based on weeks. So every Monday, okay, you will give them 5,000, 50,000 every Monday. Someone will be at your door to get 5,000. And most of these poor people, the moment you get 50,000, you have a party at house. So next Monday, when someone come to collect money, you will rush to another finance company, get another 50,000, pay 5,000 and 45,000, you have a party. Right? So people were not financially disciplined, and that system cannot continue. So that came number 6, 2016 Microfinance Companies Act. Okay, right. So that's for your life. Now we are ending the session. You will have your exams in the month of June. I have completed entire syllabus and we discussed different past papers, but I want you to do more past papers. Right. So with that, I'll end the session completely. Right. And I leave my mobile number for any clarification. Right. Or you can email me. I'll leave my personal email. Okay. It's better to use email so I can view whatever questions, queries you have in my leisure time, and whenever possible, I'll answer you. Okay, do your exams well. All the best. Thank you.